Evening guys, evening traders, how are we doing? Now, this is something that I thought would actually be quite unique. Now, this is one of my favorite type of candlestick entries that I thought I would introduce you guys to. Now, some of you may have heard them or seen of them or heard them or read of them or done some kind of work with them before, but I just want to show you the kind of the in-depth the knowledge that you need to use these candlesticks for, because firstly, the best way I describe candlesticks to people is that it is like a language within the market. The same way if you had to learn French or learn Spanish, or the same way if you had to try and learn a sign language or something like that. Candlesticks and obviously key institutional price points are going to be the core foundation of pretty much everything that you need within this market. All other indicators and signals and whatever are just going to be an additional bonus to help us plot on maybe where we think regions of price can reverse from and things like that. But if you can let the candlesticks dictate what it is trying to tell you, then you can really use that as powerful information to understand the direction of where we're at. Now, I'm sure you're kind of looking at the screen, listening to me talking, and you're kind of reading through this already. Now, spinning tops, double dojis and spinning top doji, or a doji spinning top formation, is one of my favorite for actually understanding when we've made a significant high in the market, when we've made a significant low in the market. This helps us really dictate where we actually think a swing point reversal can actually be formed, and therefore understanding this can help us obviously be taking trades at the highest point and those lowest points as well. Now, it's all very good actually understanding what the candle looks like and how to utilize it, but in particular the specific time frames for the highest probability of entry and execution on R. Now, upon any of these little education lessons that I do, especially if I work with candlesticks going forward in this, we will be looking at here the daily time frame. I have a little three strike system here. Now, this is going to be around about 85% probability. This whole game is probability in terms of what we're doing. And again, something that I will always say to anyone that I've worked with in the past, or anyone that kind of I talk to, is it's so much more important about where something is over and above what it is. I need to repeat that. It's so much more important about where something is than necessarily what it is within the market. And this is how we can attack those highest points, attack these wicks, and utilize kind of the primary entries that we are looking for. So if you are going to utilize this candlestick, first of all, how do we identify it? Well, we need to have kind of wicks on either side of our candlestick body. This is going to be relatively neutral in size or relatively thin. In terms of coloration, this isn't something that I'm too focused on, but we do need a very similar close and open of price in a way that there's no continuation, there's no gap in price. This is going to be kind of a key area where the body shapes can be slightly different. The highest probability setups will be, of course, when you've got very similar heights and sizes. However, that close and the open of the price will dictate where we are expecting the price to kind of trade from, essentially. Now, within here, we are looking at a double doji is of course going to have that thin and neutral body in the way that we've always opened up on the left hand side and we will always look to close on the right hand side, and therefore spinning tops will hold a slightly more confluence in terms of looking to trade, as we will inevitably looking to be kind of opening up on the left, closing on the right, opening up on the left and closing on the right. So that body essentially is engulfing somewhat of the previous day's price as such as well. Now, if this wick was slightly longer, I can go ahead and stick this in here. If this wick was slightly longer, or if this wick was slightly higher, that's absolutely fine. It's more about those height and sizes of those bodies in relation to where we are looking at to understand what we're trying to trade with these spinning tops, double dojis or spinning top dojis. So on a daily time frame, this is going to be our highest probability to understand when we think we've hit a swing point reversal. We can also look to use this on a 4-hour, but again, we're probably 3 out of 4 times in terms of the reliability aspect, and that's more down to actually understanding exactly where you are in a market rather than the formations in itself. Okay, now so having identified it, what we are looking at, this is a 2 candlestick formation. So if you've seen an individual doji or an individual spinning top, that is creating that indecision within the market. But it's when you get the 2 together that I find that more exciting in terms of actually wanting to be able to be in a trade or understanding when the position is ready for me to find an execution within it. So it's a 2 candlestick formation. We are using this to actually confirm as a potential swing point confirmation. How do I know that I've made a high in the market? How do I know that I've made a low in the market? What we can often do is actually use these spinning tops tops on multiple occasions to help us dictate where the next directional bias of the market will go, and then obviously take the position upon that. And as I follow up here on the third point, it's the confirmation of a high and low within the market. For example, a higher high, a higher low, a lower low, and a lower high. And therefore we will use this as a reversal formation, although as a reversal signal, because there's multiple ways we can look to execute from this type of a formation when we do come into the market. This is representing a period of consolidation and de-acceleration of price, imminent therefore for a change in direction. So this is kind of everything that you should be thinking about. Now, as this market or as this information starts to sink in, this will be kind of an instant thought in your head. So we've identified it. We know exactly what it's trying to tell us within this market, the language that it is trying to tell us here. Now, specifically where we are trying to find these spinning tops, these double dojis, these spinning top dojis, this has to be at the top or a bottom of a trend. So you are only ever really looking for this in a particular area of price. And that should really help us actually when using these, because if you find them in the middle of the trend, this could be a slight rest phase. And if it hasn't come up to kind of levels of resistance or support, or in return maybe Fibonacci levels, or maybe if you like to use moving averages, there isn't any of that dynamic support and resistance to confirm that you've got an extra confluence layer to having rejected from that high or that low. So spinning tops in general, this is kind of one of my favorite type of candlestick formations that I will look out for, and something that I do hold a lot of reliability aspect on. So having identified it, we know what we are looking for, we know how to find them and what it's meant to tell us, and we know where and specifically what we are trying to do with it. Now, if I do kind of go flick through a market, now that I kind of highlighted this fact for you, you will see this time and time again. Now, I'm specifically on GBP CAD. This is just where I actually just made this formation here. But if we did actually look down, now I'm on a daily time frame here. So let's just keep this very simple in relation to kind of the most recent price action that's been going on. Now, from what I can see almost instantly, hopefully we can kind of follow through here. Now, almost I can see that the market had made a rally up into the high here, coming equal to high. Can we see here how from body to body we are very similar in price, and we can see how we did actually formulate some type of movement pushing us back to the downside before retesting and coming back down. And now again, in a similar format, we are looking at the bottom and the tops of trends to dictate when we think the price action can reverse on us. Now, as we've pushed higher, we've pulled back and to formulate a new higher low. How did we know that the higher low was confirmed? Boom. If that's all that you've seen at that moment in time, I'm now thinking, right, I'm at a key psychological price point. I've formulated my favored kind of reversal formation here, and therefore I could be expecting a break to the upside and then look to find an execution pushing me higher. So we've got further ones in here. Now, if I go ahead, hopefully you can see this alongside the sequence with me. We have almost our double doji scenario at the top of an uptrend. What did it do? It caused a reaction to push us back to the downside and therefore come and create this new high-low sequence in here. Now again, having pushed up, pulled back, what did we have here? We had that third variation, doji, spinning top. Now this is where you've got to understand that this market, candlesticks can hold characteristics of other candlesticks in what they're doing, and it's about the story of price. What is the story of this price really trying to tell you? Now, having rejected from the high and pulled back, we had a little retracement and pulled back into the similar support level and formulated the candlestick reaction that we needed to actually dictate that we were then going to go higher once again. Now, if you again look deeper into this sequence here, you can see one drive high in terms of the impulse. We've had the correctional phase, boom, spinning tops, suggested that we are going to go create a new higher high. We've then pulled back in terms of our third wave here in the sequence, 1, 2, third wave. Now 3 is a bit of a magical number within the sequence. We'll often have our highest probability of execution upon a third wave drive, but that's a whole nother topic for a different day. Now this is where a lot of the pound pairs recently can be utilized using these spinning tops, because again, what did we have most recently? Having suggested up here, we did in fact get, now if you were looking at the first one, I would say, right, spinning top, doji. We then followed through with almost 3 days of consolidation at the high there, and therefore that was again having pushed up into the high, rejected this highest point of around 1.770 again. We could quite clearly see that this was imminent for a reversal and a push back to the downside, and we had the follow through today. Now, although this is a daily candlestick, it may not look that big to you. That's over very close to 200 pips there. 200 pips from just understanding that a signal from candlestick price action is telling us that we're pushing to the downside. Now, I don't want you to I don't want you to just think that I've done this all on purpose. So what we can do, GBP AUD, for instance. Let me get rid of this. I'll actually come back to GBP AUD maybe in a separate video. But again, in this whole sequence that we've been in right now, can you see doji, spinning top, push into the high, pull back. We then formed spinning tops, pushed into the low. We pushed higher, spinning tops, reversal, confirmation of a high, confirmation that we are ready for that swing point reversal to now push us back to the downside. Bang, make a new higher low, pushed back, and continuation here, there, and everywhere. Now, we've had the signal early on over here that we were imminent for a little bit of a reversal. We've consolidated in here, and this is where we will need to use other techniques. I can quite clearly see now already that we've got a left ahead and a right shoulder available here. So technical charting patterns will then come into play because the candlestick formations have already formulated, and we are now looking for a lot further price action on this as well. So that was kind of GBP AUD. I remember a really strong one on Euro NZD. We'll talk about this one as well in a second. Over here, in relation to drive into the low, push up into the high. Now, at this moment in time, I understood there was a lot of people looking to go long on this pair. But if you see, we had 1 drive, 2 drive, 3 drive in terms of the lower high at that scenario, spinning tops, retest, and then drop into the price in there. So this is something that I want you to go and back test and maybe add to your trading tools. If you do see it on a daily time frame, I'm never really looking to maybe execute on that daily time frame, but I'm using it as my warning signal to then scale down into my lower time frames to be able to formulate some kind of entry. We can come over to maybe some of the US currency pairs or the US dollar currency pairs. Now I can quite clearly see here already on the most recent time frame, the whole decline on this scenario was again pushed up. What did we get? Spinning tops, wicks on either side of the body in a way that our bodies are relatively similar height and size, but the most important thing, where something is in a market over and above what it is, and therefore this was dictated, and you could have caught this whole entire move having just understood that these spinning tops at the high of a market is what we are looking for. We've then impulsed down, corrected. What did we get again? Confirming that we were looking to now push into a new lower low. We got our spinning tops. So let me go ahead and correct that. Bang. Spinning tops, we confirmed once again. If we follow this sequence on, I'm pretty sure we can almost use something like this. Wicks on either side of the body, close and open of very similar height and size, and we can now expect maybe the reversal. Because you've come off periods of confluence there as well, we could expect the push back to the upside. The same way that, again, if you follow this price down, understanding what price is really trying to tell you. What is the story of price? We've stalled into this zone. Similar height and size and bodies. Coloration, not too fussed about. Wick size, not too fussed about. The height and size of the bodies is what I'm trying to focus on, dictating that I know when I'm ready to then formulate some form of reversal. We pushed up and made the higher high. Now this is a whole sequence in itself. Having gone into the high, we then make a new higher high. We look to correct back in towards this lower high. What did we formulate here? Once again, warning signal that we could be pushing higher. Again, you kind of got the double doji formation in there, followed by what I would also class as spinning tops in there as well. So real de-acceleration in price to suggest that we are looking for those reversals that are imminent. So again, I don't need to go and highlight. This is what I want you to do as a little bit of homework. Maybe go back and back test all of this information and just utilize, get used to kind of seeing spinning tops on a daily time frame, and therefore you can almost step down the better you get on the 4-hour time frame as well, and help use that in alignment with some of your trading. Now, obviously, a lot of you guys are going to be asking about how can I find entries while using this. Now, very simply, should we use this or should we use, let's use GBP USD, because I know this actually occurred just now, basically, as of the last 2 days. So I actually missed this trade, and I'll be very open about that. I missed this trade. I was busy doing some other things. But again, having seen this type of a formation here, 1 and 2. So imagine if this price didn't exist on the last couple of days. Now, if that's what I've seen. Now, what I highlighted the other day is that I'm always looking to sell at the highest point, right? I'm always looking to sell at the highest point. So if you consider that this candlestick is closed in here, now that's the daily candlestick closure. Now, this is where we can scale in. The thing I can't do on this replay tool is actually change the time frames, because it will delete what I'm trying to highlight here. However, what I would be then looking to do is understand that, right, this period of liquidity, can you see that from my first candlestick wick to my closer and my closing point of the body is now where I'm expecting some form of retracement. Now this is where we can look for those highest point entries in a way that we would then have to step down the time frame and maybe use some of our other reversal candlesticks on the 4 hour, the 1 hour, once we go and retest those liquidity points to find an entry to then actually take this thing lower. Maybe back into here, or ideally back into this area of strike point 1.300 level. So the first point of it, you are either looking for it to retest in the high of the wick or the low of the wick to then utilize the lower time frames to actually find an entry. Now the more generic term, which I like to use, is what we can do. We can take the very first candlestick, okay, wick to wick. We can take the very first candlestick. It doesn't matter what the second candlestick's done, but I'm going to take the low and the high of that candlestick. And I'm going to look for the kind of directional break that I have in mind. Now for me, I was very bearish on the pound simply because we kind of reached once, we reached twice at a key psychological price point. Institutional level we rejected and therefore made this decline in price only to pull back up. So I had kind of movements in price already dictated for myself. And then what you saw the other day, or sorry, not the other day, it's been a long day. What you saw earlier in terms of referencing where I'd like to use the tops and bottoms of trends, supports and resistance levels, and in alignment with potentially our Fibonacci key price points as well. Now 61 and 71 is always going to be the pocket that I look to take my trades from. That is my style. I like to have the deepest corrections in price to then give me the highest probability setups with my risk to rewards. So this is a great example of how that we've pushed actually back up into my little pocket over here and formulated my spinning top variation. So I've got two things I can do here. The first one, look for any form of retracement. If we did pull back up on the lower time frame, we can then use the 4, the 1 hour to find an entry scenario to then push us back down. Or what we can do is actually take the low and the high of the candlestick. Now, if this was to break higher, I've got no interest in using that as an entry opportunity because this has simply just broken my rules and therefore I don't need to trade it. However, if it does come and formulate in a way that I'm now looking for this on a daily time frame, I will be looking to use multi-time frame analysis to actually find my entry upon a break of this level. So if I've focused on a daily time frame, I'm now looking for a 4-hour break of this supportive zone. So as we play this out, the next day, you've got a very bearish reversal candlestick anyway, so this could have been your signal. Remember, this is a reversal confluence in the way that you're looking for this to use to understand that the market's preparing itself to change in its direction. So upon this candlestick anyway, we did have pulled back up into the highs, so we could have got a higher wick entry. Remember, we are always trying to sell high and buy low. However, what we could also do is now look for the break and closure back below that form of support that was used by the very first spinning top. So let me just do that again. Can you see how this low was the low of this wick on my first spinning top? Now what I could do if I wasn't comfortable with executing from the high, I could look for a break on from this is the daily time frame. I would step down to the 4 hour and then I would look for the 4 hour confirmation and closure below. Bang, there you go. So in here, if I've missed the entry upon any reversal up here, again, 1, 2, 3 drives, remember that third drive or that third wave is that highest probability of execution, 1, 2, and 3. However, this is the full candlestick body closure below. And what do I mean by a break? I mean when a candlestick body closes below an area where no previous candlestick body was able to close before. Can you see how this body ended up closing within a region that no candlestick body was able to close before? And then bang, that would have been a fantastic entry using a higher time frame swing potential, and we can see how we could have taken a trade position from in here earlier on today. Our stop losses will have to come above the high of the wick, and then we can look to target obviously price points in which we think the price can end up falling to. Now for me, I do like 1.3 on this level. I'm actually going to go away for the next couple of days, so that's why I didn't plan on maybe breaking down any charts tonight, just because I wanted to maybe do the education platform that you can spend Friday, Saturday, Sunday working on and see if you can spot them in the market as well. But yeah, I hope that was quite useful in a way that this is one of my favorite formations that I look to use or look to utilize on time and time again. Just as a bit of a test, we can clearly see that this was a bit of a level and we see that we've broken through it. So what are we going to look to do? Maybe pull back up higher and look to continue the sell-off position where possible. what can we do over here? If you want another example, I do like to use this on kind of USD CAD. Whatever's going on over here, this is a great example as well. I'm just going to use the low of this spinning top in here. If you can imagine, at this moment in time, that's what you've seen, the spinning top reversals at the top of an uptrend, so therefore I'd be expecting maybe a pullback. Where could I expect the pullback to? I've got a nice psychological price point here, which was the previous high in this market, and therefore having broken and made a higher high, I'm 75% likely to come and correct in towards my new higher low. So having formulated my spinning tops over here, if I wasn't comfortable with selling from the high position, remember I'm always looking to try get in at the highs, having been given the higher time frame price. So if I pushed up into here, I would be looking for smaller time frame entries upon a rejection of the highs to then take me into here. Now, if I wasn't comfortable with that and I wanted to use the break of the consolidation, essentially, we would now be looking to scale in on the 4 hour. Let me come over here. We'd be looking to come and break on the 4 hour. Stops would have to go above the high of the entry candlestick, and then we can use that to kind of push ourselves back into the low. We can see that this would have had to have been the stop, and from a swing perspective, we could have looked into down to here for a nice 200 pip trade. Now for me, I always like to attack the highs, and I'm looking for the multiple peaks and wicks that I'm driving into. 1 drive, 2 drive, 3, and 4, again, we would have been looking for entries in here. But can you see how this is really starting to play out time and time again? Even on this scenario, again, we've now dropped down, we've pushed back up. We can see that we formulated the spinning tops to dictate that the price action is now ready to maybe begin its new impulse leg to the downside. What I want you to do is maybe take the low of the first one, and then we can use the time frame drop down to actually give us a break of direction or an entry signal by breaking that minor support. So as you come back across, we did have a nice break and closure below. Your stops will come above the high of the candlestick body, and we can use this to then push back in towards our low of support. All right, so if I do come back over to GBP CAD, I will just leave this up here, so feel free if you want to take some screenshots or if you want to kind of use this. This is just a little bit of a give back to me. This is one of my favorite formations, something that I've used time and time again and really developed and worked on, and something that you will hear me talk about a lot. So we are looking at this to confirm swing point reversals, confirmation of a higher low in a market, and representing that period of de-acceleration in price and imminent change of direction. The most important thing in a market, where something is over and above what it is, and we're looking to use this at the top and bottom of trends, levels of resistance and support, and Fibonacci regions. Guys, that's it from me. The Telegram will be really, really active as of next week, putting a few pieces together, and I look forward to catching up with you soon. Trade safe.